Welcome to the Expansive CEO podcast. I'm your host, Hannah Chapman, founder of Expansive CEO and X Squared Wealth Planning. Buckle in as we explore how to create true prosperity and build a business and a life that expands beyond yourself and makes a dent in the universe. Welcome, everyone, to the Expansive CEO podcast. I'm your host, Hannah Chapman, and this is an episode of Investment Friday for January 10th, 2025. And I am here today with our good friend, Brad Haines, the Chief Investment Officer of Junction Wealth Strategies. Hey, Brad, how's it going? How's your new year starting?
Doing well, actually starting really, really well. So that's nice. How's yours?
For me, so far, great. Like personally, it's been really good. My kids had 2 snow days this week. So we're recording this on Thursday, January 9th. My kids were supposed to go back to school on Monday of this week after Christmas break, but here in Cincinnati, we got like, I don't know what the final count was, but somewhere like 10 to 12 inches of snow. It was a bunch. And so they had 2 snow days. So everyone had a great time. It's been fun. There's still snow on the ground. We're gonna get more snow tomorrow. So yeah, it's been nice. I've taken um a fairly like slow approach, I think, to the beginning of the year this year. And at the same time, this week, full week has been my first like full week back in the office, and it's been pretty busy. So beautiful. Love it. Love seeing my clients and meeting new people and recording new podcasts and all of those fun things. Um, and definitely ready for the rest of, let's see what 2025 has in store business wise.
Yeah, it's one of those things that I think over the holiday period, I talked to a lot of people, both personally and professionally, clients and friends, and the like, centers of influence, and everybody's been asking me. The most common question is, "What's going to happen in 2025?" And I
Yep.
said, "Look, there's two themes to really focus on for this year. One is geopolitical." Okay, geopolitical risk, geopolitical opportunities. Um, as we know, President-elect Donald Trump will be inaugurated on January 20th. And at that point, he will be able to start implementing some of the policies that he has indicated that he would pursue. Um, he'll be able to start implementing them. And what I tell people is it depends on the scale and the speed of implementation. In
Hmm.
his first term, he used to put out ideas, and then the implementation of that idea would be very, very different sometimes. So it's not necessarily what he announces is what actually happens. And so we have to see what actually happens. What I would say is the last couple of weeks have been, I think, a harbinger of what's going to happen, much like in his first term, his second term, when he gets on, Truth Social or Twitter, it's a little bit of crazy all the time. And so, we've all heard about him wanting to take over Canada, Greenland, Panama Canal, all these types of things. And so, right now it's just talk, and Canada, Denmark, and Panama are actually our allies. So it would be a very unusual path to pursue, and I doubt he would have very much following within the American citizenry for that. But he did run on being an anti-war type candidacy. So the fact that he's now talking about, maybe military action to take over Greenland or the like is a weird turn of events within a very, very short period of time. Even in so much that even the most diehard MAGA fans have said, "Whoa, that was fast. That was a bit of a change."
Yeah,
Uh,
and actually, one of the other big ones that received a lot of media attention over the last couple of weeks is specifically Elon Musk and Vivek Ramaswamy coming out in like full-throated support for H-1B visas, which mainly, not exclusively, but very heavily affects like the tech sector, being able to hire engineers from outside of the country.
so
Um,
explain a little bit um, what HB1 visas are.
So yeah, H-1B visas allow companies to bring in foreign workers to fill jobs that they say they cannot, they don't have the talent pool to hire from locally. Right. So think about a tech company in California, for example, somewhere Silicon Valley, and they need to hire engineers for a specific software. They say they put the job out for American workers, and they say they don't have any qualified candidates. So they need to be able to hire from a different talent pool in order to fill those positions. That's the basis really for that H-1B visa. So the H-1B visa specifically allows people to come to America to work, and that employee is tied to that job. That's the other aspect of this. Like they are hired specifically for, at that company for that job, and the company holds the visa. The person doesn't hold their own visa. They can't quit that job and go somewhere, work somewhere else or take a different offer. The company holds the visa. And that is a big aspect of, some of the questioning that's coming out around that. So I'll pause there. That's the basics with an H-1B visa. The economics behind that are also pretty complicated because what Americans are saying is we have tons of talent. We have lots of software engineers and, of all experience levels that have been laid off in the last several years from big tech layoffs who are available, who are looking for work, and they're not, being hired for some of these positions. So there's this um, real economic issue for Americans looking for jobs. And then we've got Elon Musk and Vivek Ramaswamy coming out and saying, no, we don't have the right talent. We have to be able to use these visas to get, workers when
And
mm,
generally, people who come over with H-1B visas are paid far less than if a American engineer or software programmer were hired domestically. So
yes.
it's it. So I will say that there are some things that need to be changed within that function within that program. But for the most part, America has America's economy has grown over the past 40 to 50 years, very significantly relying upon those visa holders, those people who come over from foreign countries, um, and do a lot of our technology work. They have created a lot of wealth in the United States, and they have done a lot of the technology innovations, which we all use on a daily basis and benefit from. So it has been a very good program, economically speaking, for America. So I hope that they stay there and they fix that. Because I do think that it's important to, one, bring in more talent, but two, to allow them to have more labor flexibility and not tied to that company so much.
Yeah, and that's interesting. I would say the pushback has been that, Trump actually campaigned on this, we're deporting all illegal immigrants. Um, well, he had some pretty strong rhetoric around all of that. And that part of it was we need Americans to have more jobs, right? We need to have more jobs for the American people. And that's where this H-1B visa issue has come up so strongly that, the Republican Party is like, wait, like one of the reasons we voted for you is because we thought you were going to make sure that there were more jobs available for the people who need jobs. And the tech jobs, in particular, that are frequently filled by H-1B visa holders do tend to be higher paying jobs, right? But what you just mentioned, if they bring in someone from, India is a common place for us to get H-1B visa holders from. They pay, I can't remember what the percentage is, but it's quite a bit. It's somewhere around 30% less, 20 to 30% less than they would an American citizen for that same position on average across the board. So there's this scenario where I think there's balance that needs to be struck between, well, you can't just say you have to hire people because you don't have a talent pool, that's not necessarily accurate. If the reason is, no, we want to hire from outside because we save 20 to
Right.
30% on the labor cost, and we have a person who literally can't take a different position, right?
Right.
So, like you're saying, that flexibility, um, that's interesting. Even if they had the flexibility to leave for a better offer, that probably would change um, the the way that companies look at H-1B visa program.
Yeah, I would agree with that. Yeah, it's interesting. So what I've told, a lot of these answering these questions is it depends on the timing and the scope of how and of what policies he implements. You
Hmm.
know, deporting 11 million people in 1 year versus deporting 1 million for 10 years, very, very different economic impacts. So we have to kind of sit tight and see what happens. Now, on the good side, on the pro side, we have we're in the midst, we're just scratching the surface of the artificial intelligence trend, that revolutionary or innovation cycle where artificial intelligence, robotics, nanotechnology, material science, um, robotics, all of these things, personalized medicine, all of these things, we're just scratching the surface on a lot of those trends, and they will be coming about more and more over as the year progresses. So I think this year is a year where the AI trend has been all infrastructure based. Okay, it's all been infrastructure based. It's been, NVIDIA chips. It's been, who's training the models, whose models are we looking at, and now it's going to go towards more application, right? Everybody sees the chat bots. Those are applicate. That's one easy to understand, easy to see. Application for AI. However, there's going to be a lot that we don't see that will start being applied this year and next year. So it that is a big trend. That is going to generate a lot of earnings. That's going to generate a lot of margin improvement as AI replaces some positions, and people are going to have to be retrained for different types of jobs. So again, not all at once, over a period of time. So the economy will evolve
Hmm.
just like it evolved with the internet, just like it evolved with personal computers. It just takes a bit of time. But right now we're going into that S curve where we're starting to, we're still at the flat part of the bottom, but we're going to start accelerating up that S curve in terms of innovation, in terms of earnings, in terms of labor productivity. And that's going to be an exciting time. So that's on the pro side. The negative side could be politics, geopolitics, wars, conflicts, those types of things.
So, one thing that is super interesting to me to like compare back to, I really appreciate the comparison for, AI and the way that things are evolving with it to the introduction of the internet as this big force, right? Because that was a huge change in the 90s into the 2000s, right? And people were worried about their jobs. People were worried about, what's this going to do um, to the economy, to, literally just how are we going to move forward for everyone? And that we can like map that back also to, even industrialization and automation and different things, right? Like we've gone through these cycles before of, machines in some way, shape, or form taking the place of human labor. And so AI is just the next iteration of that. And I think it's really important to keep in mind that there will be jobs even in the next 10 years, right? The next 5 to 10 years, there are going to be positions that we don't have names for yet. Like we don't even know what the next, employment sector looks like when AI is more embedded. in our daily lives because it will be, right? It already is in some ways, but it's gonna be there even more. So when we, yeah, like um you couldn't necessarily have imagined one day that a stock trader was going to be like just clicking buttons on a computer all day long, right? Like back
Right.
in 1940, that wouldn't have made any sense. You're like, that guy's not trading stocks. What are you talking about?
Right. It was all open outcry, and now it's all mostly electronic. It's interesting because I was reading a little bit about artificial intelligence and a big report that this company or this institute had done, and they think, and here's a one small example, but it's still an example, is when it's planting time or harvest time on a farm, you typically have to get out in a big tractor or combine, and you have to plant the seed, till the soil, plant the seed, and then do the same thing when it's harvest time. And usually well, right now there has to be a driver, whether it's the farmer, whether it's an employee, someone has to be driving that. Okay. And the truck that catches the grain if they're harvesting like wheat. Um, well, can you imagine that in the next 5 years that could be all AI driven robots that you can harvest throughout the night because you don't need to be out there.
Mhm.
The tractor and the truck are doing itself all the way. And it could be electric, so it's almost silent. So I thought that was an interesting use case because I think that is very, very efficient. Whereas right now, the farmer, the worker that's driving the truck and the tractor, it's pretty boring. It's not that, there's not a lot to do. You're just following a line forever and then flipping around and following it back until you've harvested everything. And that's what it's going to do. It's going to get rid of those jobs that aren't necessarily a human is needed. A human's talents aren't necessarily needed, our strengths, you know. A human is made to move and to think and to be creative and find patterns, not just to follow the same instruction over and over and over and over again. That's what computers, artificial intelligence, robotics, that's what they're great at.
Mhm.
So we need, it's kind of replacing us humans for places where we're not usually the best in executing. So interesting. I mean, there's a lot of use cases that are popping up.
Yeah, and this will play into our conversations, and I talked about this before we started recording, but I'm currently doing a series on relationships um for lots of reasons, and this will come into play also with the rise of AI, is that human to human relationships are still one of the most important things that we have, if not the most important thing that we have as a species, is our ability to connect with other humans, our need to be interdependent um, as a species, right? So we need each other. We need other humans in community, and building building on that, if we automate the things that we tend to do in silos, or by ourselves, or like you said, driving a truck in silence, or listen, for hours and hours, if that's not a job that a human needs to do, what do we need to do? We need to find ways to be in community, to be in relationship with one another. So I think that as a theme is going to keep popping up in lots and lots of ways. So we're going to talk more about that, relationships and money, um, as the weeks go on, as part of our theme as well. But one thing that another current event that's happening right now that I wanted to bring up. So two things for today. One being insurance.
Yes.
And so insurance, why do we need to talk about insurance? Well, currently, again, Thursday, January 9th, there are still some very significant fires burning in Southern California. The Palisades fire, I think there's a Runyon Canyon is on fire. One's called the Eaton fire. There are how many? Seven in total right now, I think you said. And there, so many communities have been affected in the Los Angeles, northern Los Angeles area, over, Hollywood area, all just the whole thing is burning. It's really a lot of devastation. And what happened just a few days ago, coincidentally, is that there were insurance carriers that dropped their fire insurance coverage. So people just don't have fire insurance anymore. Who did have it, who paid for it, and their carriers dropped it right before these fires, massive fires, broke out. And what does that like mimic? We also are seeing that in Florida with hurricane insurance, with insurance policies when people are buying homes, like that are the insurance policies are going up 50, 100 more percent in 1 year, right? That to where people can't afford the insurance on their home. But if you have a mortgage, you have to have insurance.
You're forced to.
Yeah, it's not an option, right? So my question and my, as I'm wondering about this out loud is what is this? We're already seeing the effects of it in Florida for some people not being able to sell their homes because people can't buy their homes or don't want to buy their homes because they can't get insurance on them. Um, and so is that going to be the same thing that starts to happen in California? And what does that do to the real estate sector, the economy, those local economies? What do you see?
Yeah, for sure. I mean, uh, so with the most recent wildfires in LA, it has sparked the conversation about for property and casualty insurers about do we need exposure into California at all? It's the wildfires seemingly have become more frequent and more devastating. A lot of it sparked from their electrical distribution and transmission grid. Um, we don't know the cause of these most recent fires in Los Angeles that we're discussing. Um, but for an insurance company, they have two ways to make money. One, they make money on what we call underwriting profit, and that is the business of insurance. They collect premiums and they pay out losses when those losses occur. The second way is investments. They have a big portfolio of investments, and as those investments grow in value or pay dividends and interest, they collect that. Those are the two ways insurance companies make money. And the problem with California right now, and similarly with Florida, is you have a specific weather event or a specific event that has been taking their underwriting profits to losses for a number of years. Well, companies aren't in the business of losing money in their underlying business, so they have to make changes. They either have to raise their premiums to make it worthwhile for them to write that coverage, or they just stop writing that coverage altogether. And you've had a mix of both. You've had some property and casualty companies leave California. You've had some stop offering fire coverage, which is what you were just talking about. And both are not good. Both are something that needs to be stemming that tide. Like we need to have homeowners insurance in California for a lot of different reasons. But regulating or going after the insurance companies, I don't think is the right approach. I think the right approach is fixing the reason we have so many losses in one particular area, finding the root causes and fixing those causes. Um, you know, Building reservoirs. California hasn't built new reservoirs to store water for many years, decades, and other places have. Arizona is a great example of they have proactively built a bunch of reservoirs and they filled them. They store water in different parts of the desert for times just like these where they need to pump it out and use it. Either the citizens need to use it or they need to use it to put out the fires. California hasn't been prepared to do that. And so I think I think you're going to start seeing economics force California's government to start making some changes to where they have to address the wildfire causes.
Well, one cause that I heard, which was super interesting and makes a lot of sense, and this goes into like the forestry aspect of land management, is that a lot of that the Malibu Pacific Palisades area is built, or not built, it's built, well, it is. It's built onto land that has vegetation that propagates via fire. So for millennia, this area has grown, and the plants, the vegetation that's there actually requires fire to propagate. So what is it meant to do? It means that it's similar to like the prairies in, in Midwestern states, some parts of Arizona, right? The prairies actually are meant to burn. When lightning strikes in a prairie, it burns all of the grass, it releases seed, it allows new grasses to grow, it keeps big trees from growing, right? And keeps the
Yeah.
plain ecosystem. Same in Northern California, where, sequoias, their cones only open with fire. They need fire through the forest in order to, propagate the trees. But when humans move into those areas, and Malibu is a very large area that is included in this, when humans move into those areas and want to live there and not have their houses burned down, right, as we do, then we have to stop the fire. We have to manage the fire. We can't allow it to do its job that it's been doing for millennia, which is to clear out the old growth and allow for new growth. So this, you know, it'll be interesting, I think. And I think the same goes for Florida in the areas that are super hurricane prone, right? Like people keep building on the beaches, or in these areas, rebuilding and building, but the weather patterns haven't changed that much. They have and they haven't, right? We've got climate change models where things have, but those areas have experienced flooding and hurricanes and weather systems
Forever.
again forever. Yeah, like that's the nature of that area. So it's interesting to see. I'll be interested to see if that forces builders to build differently, right? If we have fireproof materials, like, yeah, you can build homes here, but they actually have to be fireproof. They can't be, the materials that we've used so far. We have to build differently if you're going to build in areas like this.
Yeah.
Um,
Just know that you're going to have fire every once in a while.
right, exactly. And so build for it rather than build and then have to protect against it, right? With resources, water that may not be available. Um, but yeah, the insurance companies pulling out of those areas, that to me, it's an interesting space and history to be living through that part, especially if you're a person who is in California, who just had their fire insurance revoked, who just lost their home to a fire and everything they own.
Yeah, which is devastating.
Yeah.
Yeah, it's devastating. I mean, my heart goes out to all the people that we've seen on the news, people that you may know, you may not know. Definitely a lot of celebrities. Their homes have gone to the foundation, being burned. And so, there's a lot of people that this is extraordinarily devastating, you know. Ordinary people, the people that live there and take care of everything. This is a real trial and a real challenge for them. But economically speaking, I think there are going to be some incentives put into place to do something, because wildfires do not seem to be getting better or less, in Southern California. So there is something that has to happen. So it's going to be forced on the people of California to figure that out.
Hmm. Yeah. So we'll see with that. The other thing that I wanted to talk about, that we talked about a little bit in our investment meeting yesterday. So we're switching gears away from insurance. We talked a little bit about cryptocurrency. Um, there's a lot going on with that right now. Just in general, has been for a while, right? If you don't know what cryptocurrency is, you've probably been under a rock or in a cave for the last 10 years or more. So, with Bitcoin being the biggest player, Ethereum is probably the second biggest, I think, at this point. And we've got another coin, is the Doge, Doge, which is an
Well,
interesting coincidence, right? Dogecoin
yeah.
that President Trump is also involved with. So there are a lot, right? There are like thousands of different cryptocurrencies. And traditionally, brokerage houses have not allowed any sort of investment in cryptocurrency. Any of the big brokerage houses. There just hasn't been any way for people to invest in crypto um, through a traditional broker dealer, through any RIA. We just don't have access to those until last year in 2024 when Bitcoin ETFs became available. So we have this vehicle now where the Bitcoin ETF is available on regular brokerage platforms. And it begs the question, rather than just people having a cryptocurrency wallet that they maintain, you can buy, you can have your crypto wallet, you can buy different crypto coins, you can do all kinds of things with those applications, those software applications. But now that they're available at the larger brokerage level as well, it really begs the question. And I am asking this because I get this question a lot as an advisor. Should we have it in our portfolios? If yes, why? If no, why not? And what do we see as um, the potential, you know, of Bitcoin or these other coins and why? So I thought you had some really interesting and important points that we spoke about yesterday.
Yeah. So, I mean, um, cryptocurrency is an interesting concept. Um, and I think it's a great tool for a couple reasons. And now with the advent of the ETF, a lot of investors, retail investors can and money managers can gain access to it. Prior to that, it was not allowed by a lot of professional managers, insurance companies to cover us recommending a asset that really didn't have uh, any backing, just really didn't. Now, obviously, it a lot of the cryptocurrency is based on blockchain. Blockchain is a fantastic technology, um, which essentially is, if you want to think of it as the breadcrumb trail in Hansel and Gretel, you can just follow the breadcrumb trail and figure out who owns it, who has owned it, when they sold it. Everything with related to that block is detailed on that ledger. It tells everything about that block since creation until today. So it is a fantastic technology. The use of it when creating cryptocurrency was, to use it as a store of value, as a method of transacting economic activity in a cheaper, more timely, and importantly, anonymous way. Okay, more decentralized. Um, and that has occurred a little bit. But what is interesting is cryptocurrency is a because of the volatility inherent, it hasn't really become that much of a store of value. I mean, it is a little bit, um, but it also depends on what month you do it, right? So, uh, uh, back in the day when uh, Bitcoin was really, really new, someone went and purchased a car with Bitcoin, and they agreed on a price of a certain level of Bitcoin. Bitcoin doubled, all right, but the price wasn't US dollar value. It was a Bitcoin value. So within a month, the guy ended up paying twice as much for the car
Mm.
because Bitcoin went up. And so the dealership made that excess profit. And that's where I think people, when they're thinking of Bitcoin and using it to say transact economic activity, they can really have a problem because the value of the underlying Bitcoin is not stable at all. It's very, very volatile. So you can end up overpaying or underpaying just depending on when you transact. And that's generally not great for a currency. Um, that said, it's a good way if you want to transfer money to underbanked areas like the third world countries, the emerging markets, the frontier markets. Um, I know it has been used a lot to transact. My daughter is currently in Peru, and right now the best way to get money to her is through an old style transfer service, which is expensive. And so I'm thinking about setting up a wallet for her and transferring Bitcoin or some other currency where that she can just automatically use in the area where she is. So it's something I'm looking at in terms of transferring value to her in a somewhat underbanked area. Um, so I think for people, if they're looking at Bitcoin, they have to really kind of work out in their mind why they're buying it. And um my hope is that every investor that buys a digital currency has a use case in mind as to why they think it's going to be adopted more fully and that the value is going to continue to go up. All right. Because um, if that is the case, then you should add a little bit to Bitcoin. Um, I know many, until we find a lot of use cases for it, you know, outside of the fact that it's gone up in price, um, a lot of people can't really describe how the use case is going to make exponential value. Um, so it's just one of the things that people are usually buying it because it's been going up in value, even though they really don't understand why it's going up in value. In fact, one of the largest owners of Bitcoin last year was a substantial portion of the buys of Bitcoin last year.
Yeah, so
So,
I want you to talk about that for a second because this is the piece that's like that really gives me pause. Because one of the arguments for Bitcoin, for the fact that it will quote unquote all just continue to increase in price forever, as I've heard some people talk about it, is that there is supposedly a finite amount of Bitcoin that can be mined, somewhere around 14 million Bitcoin, right? And so we're not there yet, but getting closer to that supposed cap on Bitcoin. So people say, "Oh, it's a finite resource. So if you have some of it and people want this finite resource, then the price has to go up because there's only so much of it to go around. It's not like it'll just be keep being created forever." And you hear that and you're like, "Oh, okay, well, yeah, I mean, economically that could make sense." But what you shared yesterday was like, "Oh, wait a second. So tell us more about that, about who
I'm,
owns."
I'm trying to get you some detail really quick.
Thank you. I appreciate that.
You're welcome. So, there's a company called MicroStrategy, which we have no opinion on. This is not a recommendation. This is only for your information. Please do not buy, sell, or trade this stock based on anything we say on this podcast. So it's something that I want everybody to understand that we're not telling you to buy it. We're not saying it's a good thing or a bad thing. It's just it is what it is. So a company called MicroStrategy, and the CEO of that MicroStrategy has decided it was a decent size, small software company, and they had a pretty decent product. And so they made money by obviously selling the service, selling their software, and making money. Well, in 2020, I think it was around 2020, their CEO decided to start accumulating Bitcoin as a strategy. And so, because Bitcoin over the last 4 years has grown so much in value, the value of the balance sheet, the assets for this company has grown commensurately. So I'll give you an example. So in September of 2020, they owned 38,250 Bitcoin. Okay. Uh, as of the end of December this last year, 2024, they owned 444,262 Bitcoin. Okay. So that's a lot. That's a lot. In fact, he's added since, do some quick math here, just a second. I apologize. I can't do this in my head.
Call that public math.
Yeah. Public math in front of everybody in the world.
That's what calculators are for.
Yep. They've added just this last year 255,112 Bitcoins this year. So he has effectively been going out to the debt markets, issuing bonds, taking the cash in, and buying more Bitcoin, which that strategy can work out really, really well if Bitcoin goes up forever. If it continues to go up, then the value of the balance sheet continues to expand and the debt becomes non-existent. It basically just outgrows it. Obviously, if it goes down, if Bitcoin goes down, then this company will get crushed. Okay. But at this stage, as of the end of December, he's doing quite well with the amount of Bitcoin on his balance sheet. Now, the reason I'm bringing this up is he was a substantial percent of the purchases of Bitcoin last year. So if you back out how much he purchased, would Bitcoin have gone up as much as it did? I don't know. My guess is probably not, because that's a substantial buying. That's a substantial part of the demand for Bitcoin last year was this one institutional buyer, this one company buyer.
Did- I thought you
And
said yesterday he bought around 30 or more than 30%.
roughly, yeah. I'm trying to find that specific percent really quick, but
And in any market, one of the reasons that we're talking about this is that in any market, if one buyer is making up a large percentage, I mean, even like 5 to 10% would be a huge percentage for one buyer to be, buying of an asset that's that large. That makes them what we would call in the investment industry a market maker, doesn't it?
yeah, I mean, it's effectively saying, well, I mean, here's the thing is you're trying to essentially corner the market wherein you will control the market. Um, what does that mean for the other investors? Well, until they get to the last, you know, 10, 20, 30, 40%, it'll make you wealthier. But when you get to that last few percentage points, you effectively make it a private asset. And I liken it unto copper. Let's say someone decided to buy all the copper in the world. And over a period of decades, they did just that. They bought all the copper in the world. And then you go to sell it because you want to, basically make money on your investment. Well, who's going to buy your copper? Very few people, because all the substitutes for copper will have already been developed and being used. So it becomes a kind of a somewhat of a weird dance between you trying to corner the market and you buying the entire market and making it completely useless to you as an asset. So at that point it's still an asset, but it's not a very highly valued asset. So you need to be careful what you wish for when it comes with that. It's something that's very, very important to watch out for. But again, as of right now, this guy is a genius. He looks like a genius because Bitcoin has gone up so much and he's levered against it and he's bought more. So as long as it continues to go up in a pretty decent line, he'll be fine, and until he's not. So
Right, yeah, until he's not. And so I loved the comparisons that we kind of talked about yesterday because what you said at the beginning of this segment in saying, it's not it fluctuates so much that it isn't a reliable currency to buy things with, to pay for things with, which is what it was originally intended for, was to be a non-traceable currency. That was the original intention, right? And used for all kinds of illicit purposes, right? Like we want to have a currency that no one that the federal government can't track. And so the fact that it is now so volatile that you can't necessarily pin it down in one day, one day your Bitcoin might be worth, you know, $20,000. The next day it might be worth $15,000 for one Bitcoin. That's huge. And any other, if the US dollar did that, we would be in panic.
yeah,
We couldn't do that. So it's not necessarily reliable as a currency, which was its original intended purpose. So now people are, like you're saying, just buying it because it's going up, not because it has a a specific actual underlying value of
right.
where and how it can be used. Um, and so with that, if people are asking about it, one of the things that we've kind of landed on is that it's somewhat similar to a commodity
Yeah,
portfolio, the way that it acts, and the way that we can trade it. It kind of fits in a commodity bucket, and that is very, they can go up, you can make a ton of money, and then within a week or a month, they lose everything, right? And they can be super volatile. With Bitcoin, I think that the thing that you're talking about with this particular CEO, if you're buying it to try and buy all of it, which is his stated goal, then you're not buying it, you're not planning to sell it. You're not planning to sell it in order to pay for the debt that you took on to buy it, right? So it has to keep growing, but you're not necessarily planning to, sell it at any point to take some of those gains off the table and put it into other assets. So if there's any like traditional mm, advice, not specific advice for anyone to take in general, right? Like put that blanket statement out there. It's that when things go up, if you are very precious about your investments, if say you have, Apple stock from 19 or not 19, 2008 or 2005 or whenever it started. If you have Apple stock and you're like, nope, I'm never selling it ever. Well, maybe that was a great choice back then. But there have been plenty of stocks that, if you're very precious about them, Tesla being one of them, super volatile, right? You can lose everything or a very large percentage of what you own if you refuse to sell it when it's high or when it's garnered enough of your initial investment, right? To take some of it off the table and put it in other places. So that's the concern that I also see with people who are buying and holding cryptocurrency just for the sake of holding it.
yeah. I mean, I think if you want to view cryptocurrency, whether it's Bitcoin, Ethereum, any of the other ones, XRP, all of those are an asset. Okay. So if you view them as an investment, you made an investment into them, you did it because they're an asset and they're an investment you presume that you want to go up in value since they pay no yield. So if they go up in value, don't be afraid to rebalance that part of your portfolio. It's not like we have a portfolio and we exclude cryptocurrencies from it because they're cryptocurrencies. We don't. You rebalance that portion. So for example, Bitcoin goes from 45,000 to 90,000. Great. Fantastic. Rebalance down to where you had your initial position of $45,000. Take that profit, redeploy it somewhere else. That disciplined rebalancing is a really important one. It protects your assets overall, and two, it still allows you to participate when markets are going up. So it's something that I would encourage as a general rule. Whether it doesn't matter if it's cryptocurrencies or whether it's stock, whether it's bonds, whether it's cash, whether it's foreign currencies, commodities, all of those things are important to make sure that you're intelligently rebalancing so that you don't overextend yourself on the risk spectrum.
Yeah. So there's our 2025 current stance on cryptocurrency. It's been evolving. It's a thing that, again, like you said, we didn't even have access on brokerage platforms to really talk about it until last year. Insurance companies, our errors and omissions insurance companies, as financial professionals, weren't allowing it as covered to be covered. Right, that was an interesting thing to learn about. Yeah, I mean, we had, as investment and financial planning professionals, we had kind of a block on being able to talk really freely about it or not learn about it. We can learn about anything, but really like practice it in portfolios. We didn't really have that ability until just last year, um, and this is still it still should follow traditional investment rules of, like you're saying, disciplined rebalancing, um, not getting emotionally invested with your financial investments, right? Like um, keeping those clear glasses on when you're making investment decisions. So that is what we have for today, for our Investment Friday episode. And as always, if you have questions, if you have more questions about cryptocurrency or whatever is coming up for you, we would love to receive your questions. You can send those to me at Hannah, HANNAH, at expansiveceo.com. And Brad, where can people get a hold of you?
You can get a hold of me at bhaines, BHAINES, at junctionwealth.com, or give us a call at our office, which is 480-253-4100.
Nailed it. Good job. Thank you, as always, Brad, for being here. We will see you next week.
Sounds good. Thanks.
That's it for this episode. Thanks for listening, and be sure to like and subscribe. And again, if anything resonated with you from this episode, I would love to hear from you. Email me at Hannah, HANNAH, at expansiveceo.com, and tell me about it. And if you're ready for your greatest expansion, you can find ways to work with me at expansiveceo.com and at x2wealthplanning.com. That's X, the numeral 2, wealthplanning.com. So until next time, remember that there is enough, you are enough, and your birthright in this lifetime is to be expansive.